Hello and welcome to Business Taxes 101. Now, if you're following along in the textbook, we will be starting on page 7. I first wanted to give a little bit of an introduction, talk about why the textbook is called The Entrepreneur's Guide to Joining Forces with the IRS and Business Taxes 101. I wanted to give a little context here. And first and foremost, the IRS is these policies and publications, we're talking when they were first put together, were designed by the rich for the rich. They were not designed for, people who are, earning an income based on working for somebody else, right? We're a consumer society, and I say this all of the time. So you have to understand that inside of these IRS publications are these gems. They're gems for business owners to save money. And obviously we see this on a larger scale when we have businesses like, Berkshire Hathaway, Warren Buffett's company, saving millions of dollars. Warren Buffett pays less than 1% in taxes, which is unheard of considering self-employment taxes are 15.3%. So this course is designed to go through all of these, options and all of these little golden nuggets and pots of gold within the IRS publications to help you, keep as much money that you've earned as you can. Now, this style of course is going to be a little bit different. So if you've taken some of my other classes, I've always done video style teaching. I switched over to audio because one of the reoccurring themes in the course feedback for all of my courses was the ability to listen to the courses and not have to actually watch the video. So I switched over from, to a PowerPoint presentation that I am going to be talking, narrating. And then I also created textbooks or e-textbooks. They're digital PDFs for each one of the courses. So if you, aren't able to take notes, don't worry about it. You can always just download the textbook and spend maybe your drive or any free time you have or anything that, you can do while also listening to something. So let's jump right into what exactly business taxes are. Simply put, business taxes are taxes that businesses are required to pay the government on the income earned from your business activities. So these taxes, can include federal, state, local taxes. If you are associated with a Native American tribe, you could also have to pay tribal taxes. Now, the amount of tax owed depends on a variety of factors such as your type of business, the amount of revenue generated, and the location of the business. So for this course, we're only going to be talking about federal, state, and local taxes. Tribal taxes vary based on tribe. So let's talk about, the types of business structures, which, business structures will determine how the business is taxed. For example, sole proprietors and partnerships report business income on their personal tax returns through a Schedule C. So basically, what this means is when you have your 1040, when you have your tax form, there's just going to be an additional piece of paper, essentially, that needs to be filled out that incorporates your business income. While, corporations, on the other hand, have a completely other separate tax form that they need to fill out in order to, file for their federal and state taxes. So let's talk about now the types of business taxes. Now, I'm not going to spend too much time talking about each one of these different types of business taxes, but just know that these are some key terms to be familiar with and that I'm going to explain at great lengths in the rest of this course. First and foremost is business structure. So the type of business structure will determine how the business is taxed. Next, we have business income, which includes all revenue generated by the business, including sales, services rendered, and any other income earned by the business. Tax deadlines are, they vary depending on the business structure and the type of tax being filed. It's important for businesses to stay aware of these deadlines and file their taxes on time to avoid penalties and interest. And I'd like to note here that you can file an extension if you're not going to be ready. So I say if you're not ready to file your taxes 2 weeks before they're due, go ahead and file the extension. It's just a way to save yourself from having to pay penalties or any interest. Next, we have tax deductions. So there are various tax deductions and credits available to businesses, including deductions for home office expenses, startup costs, research and development expenses. So I want to just say one thing about research and development expenses. I don't talk too much about that here, But if you intend on creating a product that's going to revolutionize your industry or make your industry better, maybe solve a problem for your customer base, in a way that is more efficient than what's currently out there, there are tons of tax benefits for any time, energy, money that you put into the research and the development of that product or service. Moving on, we have tax forms. So businesses are required to file different tax forms depending on their structure. So for example, sole proprietors file a Schedule C with their tax return, which is what I just talked about, while corporations file the Form 1120, which is that separate form. Okay, so next we have income taxes. So businesses are required to pay federal and state income taxes on the net income earned during that tax year. So your net income is calculated by subtracting your business expenses from the total revenue earned. So just to use some easy numbers, if you earned $1,000 that year and your business expenses were $100, that means your net income is $900. Okay, simple math. So let's move on to employment taxes. Businesses are also required to pay employment taxes, which includes Social Security and Medicare taxes, federal and state unemployment taxes, and whatever your state and local payroll taxes are. This is sometimes referred to as FICA, so keep that in mind. Next, we have sales taxes. So businesses that sell goods or services are often required to collect and remit sales taxes to the state or local government. And that basically means you collect sales taxes from your customers, and then whatever money you collect, you give it to the government. So you're not keeping any of that tax. You're just collecting it from the customers and remitting it to the government. Now, most services don't require sales taxes. So if you're, let's say, a personal trainer in the state of California, you don't have to pay sales taxes on any, money earned from your service. Next, we have property taxes. So businesses that own property such as land, buildings, or equipment may be required to pay property taxes to the local government. Then we have excise tax. So excise taxes are taxes on specific types of goods or services such as gasoline, tobacco, and alcohol. It's pretty much the bread and butter of the ATF. Businesses that produce or sell these goods or services may be required to pay excise tax. Then you have, tax planning, which is just the concept I wanted to throw in here because I'm going to repeat it throughout this entire course, but it's important for businesses to plan ahead and work with a tax professional to ensure that they are taking advantage of all available tax deductions and credits and to avoid any potential tax liabilities. That is the key thing, tax planning. You might not actually have to sit down and write an actual tax plan. You might have to depending on your business structure, but generally speaking, just make sure you have an idea of what your tax obligations are for your business and you're doing whatever you need to do to track those things. So let's talk about your tax obligations based on your business structure. So when you're starting a business, it's important to choose the right business structure that fits your needs and goals. Different business structures have different tax obligations, so it's important to understand these obligations and ensure that you're going to be compliant with laws, your tax laws. Now, LLC is the golden child. I believe it is one of the best business structures out there for new and small businesses. As you start to, make more money, I say a limit of about $40,000 to $50,000 a year, then you can switch over to an S corporation. But let's talk about the obligations you have. So a sole proprietorship is the simplest form of business structure with only one individual owning and operating the business. The owner is responsible for reporting business income and expenses on their personal tax return. This is going to be, your personal tax return is your 1040. So you're going to use a Schedule C to report your business income and expenses. So you fill out your 1040 and then you also fill out the Schedule C. So just one additional form per business. The owner must also pay self-employment taxes, which includes Social Security and Medicare taxes. That's that FICA. So self-employment tax rates are about 15.3%, which I'll talk about later in the course. Next, we have a partnership. So a partnership is a business structure with two or more owners sharing ownership and responsibilities. Partners report their share of the business income and expenses on their personal tax returns, which is going to be the 1065. It's a different form, using a Schedule K1. So every single partner has to use this Schedule K-1 with their taxes. Partners are also responsible for paying self-employment taxes on their share of the partnership income. Then we have, LLCs, or limited liability companies. So an LLC is a business structure that provides liability protection for its owners, also called members. LLCs are taxed as either sole proprietorships or a partnership, depending on the number of members. If the LLC has one member, it's taxed as a sole proprietorship. If the LLC has multiple members, it's taxed as a partnership. Members report their share of the business income and expenses on their personal tax returns, again using a Schedule C for sole proprietor or K-1 for a partnership, obviously depending on the tax classification. And last, we have our corporations. So a corporation is a separate legal entity from its owners, and the owners are called shareholders. Corporations are taxed as a separate entity and must file a corporate tax return. So this is a Form 1120. Shareholders, aka owners, must also report any dividends received on their personal tax returns. If the corporation elects to be taxed as an S corporation, it is taxed like a partnership, with the income and expenses reported on the shareholders' personal tax returns using a K-1 form. Now, that might seem a little complicated, but we're going to dive into corporations as we move throughout this course. So don't get too caught up on some of the terminology here. Just know that corporations have to use a Form 1120. If they opt to be an S corporation, then they're going to report any of their income and expenses on their personal tax returns using that Schedule K-1. And just to recap here, so understanding the tax obligations for different business structures is an important part of starting and operating a business. So sole proprietors report their business income and expenses on their personal tax returns, while partnerships and LLCs pass through their income and expenses to their owners. So, and we're going to talk about pass-through businesses later, but corporations, on the other hand, are taxed as separate entities and must file a corporate tax return. So corporations are treated like individual people. They're not, anywhere near associated to their owners or shareholders. But again, it's important to consult with a tax professional to ensure that you're in compliance with all tax obligations. Even if just for your first year you meet with a tax professional, then at least you have an idea. I recommend you meet with a tax professional every year. If you can afford it, then hire a CPA who works for you throughout the year. But just get an idea of what your obligations are, at least for the first year, and then just stay on top of it throughout the life of your business. All right, so if you were following along the textbook, we are now on page 11, but let's talk about key tax filing deadlines. Now, these don't often change. They changed a little bit during COVID, but let's go through the deadlines for each one of the business structures. So again, sole proprietors report their business income and expenses on their personal tax returns using that Schedule C form. Now, the tax filing deadline for sole proprietors is April 15th of each year. However, if you need an extension, the deadline is October 15th. But here's the thing, you have to file that extension before April 15th. Next, we have partnerships. So partnerships, you have to file your tax return on the Form 1065 by March 15th. However, if you need an extension, you have until April 15th. This will apply to the partners as well. So partnerships must also provide each partner with a Schedule K-1, which reports each partner's share of the business income and expenses. Now, LLCs, on the other hand, they're taxed as either sole proprietorships or partnerships, depending on the number of members. So if the LLC has one member, it's taxed as a sole proprietorship and follows the same tax filing deadline as a sole proprietorship, which we just said was April 15th. Unless you file an extension, then it's October 15th. If the LLC has multiple members, it is taxed as a partnership and follows the same tax filing deadline as a partnership, which was March 15th. Unless you file an extension, then it's September 15th. Moving on to corporations, corporations must file an annual tax return, that Form 1120, by March 15th, which is the same as partnerships. However, if the corporation requests an extension, the deadline is extended until September 15th, again, just like partnerships. Now, if the corporation elects to file as an S Corp or an S Corporation, They must file the annual tax return, the Form 1120S, by March 15th. And if they request the deadline, they have until September 15th. And now shareholders of the S Corporation must also receive a Schedule K-1 reporting each shareholder's share of the business income and expenses. Now, in addition to these federal tax filing deadlines, businesses must also be aware of the state and local tax filing deadlines. And if you're not too sure, you can look it up. I provided some of the tax deadlines here, but it's important to consult with your tax professional to ensure that you're compliant. Go ahead and call your H&R Block or go on hnrblock.com and look and see what the tax filing deadlines are for your state. I recommend calling the local office because if you do have any county or local deadlines, they're going to be the ones to tell you.